So guys, welcome back to my channel. I welcome you back to the second version of this strategy that I call the Avenger strategy. Right, so last week I actually dropped the first video, the part 1 of this strategy that we call the Avenger strategy. I called it the Avenger strategy in the sense that this strategy is going to pay you back every money you've ever blew, every money you've lost to your broker is going to pay you back in manifolds. So that is why I called it the Avenger strategy. If you want to know how to avenge back on your broker, how to avenge back on those money you've lost while trading, then this video is for you. Watch the videos to this end. I've seen you guys feedback on the part 1 of it, so I've seen your guys part 1. I've seen you guys feedback on the part 1 of it that you say you need the complete video. So I'm actually dancing to your tone, dancing to your request now by giving you the full strategy on how you can avenge back on your brokers, how you can reap back all you've lost in trading. So if you want to know how to take back everything you've lost to your broker, then this video is meant for you. If you are yet to subscribe to my YouTube channel, please do it to subscribe to my YouTube channel and turn on the bell notification so that you stay updated each time I'm dropping a new comment. So at the first video, I actually gave out the settings to the strategy, right? And I did a very deep dive, the pros and cons of this strategy in the first video. So if you are yet to watch the first video, you actually get the link to the first video at the description of this video and at the end of this video, so you will go and watch it. So I don't want the video to be too long, but nevertheless, let me just run a quick recap on the first video, the quick recap on the settings, because I've given out the settings in the first video, so I don't want this video to be long. But if you actually need a full understanding of how the strategy works, then you can go and watch the first video. So we're actually using 3 indicators of this strategy. So the first indicator we are using is our stochastic oscillator. The K period is 5, the D period is 3, the slow period is 3, price speed is low and high, method is simple. The style has to be the 1 pixel, then the color has to be the color of your background. So once you are done, then we are using the levels too. The levels is 80 and 20 level. So once you are done, you click on turn. So the second indicator we are going to be using, you click on that F plus again, is our Bollinger Band. The period is 14, the deviation is 200,000, shift is 0, apply to typical price, high, low and close. Right, high, low and close divided by 3. Right, then the style is 4 pixels, the color is blue. Once you are done, you click on done, guys. So the last indicator we'll be using is this envelope indicator. The period is 70, shift is 0, deviation is 200,000, method is simple, right? Apply to close. So for those that are very conversant, you see that you observe that the deviation we are using for both our stochastic, our Bollinger Band and our envelope are the same thing. Why? Because we are viewing the momentum, we are viewing the trend with 2 different indicators. So whichever one that gave us that, we can actually see what we need to see. Right, we can see what we need to see. So that's why we are using the same deviation for the two. This is part of the cons and pros of this strategy, right? This is part of the pros and cons of this strategy. And if you observe very well, we're actually using 14 period on the Bollinger Band, but here we are using 70, right? We are using 70, and another time I'm actually going to tell you how we arrive at this 70 for this envelope, right? That is not what we are going, right? So once you are done, you click on done, right? So the final indicator we are going to be using is our stochastic. The final indicator is our awesome oscillator. So the awesome oscillator, just leave it like this. therefore the way it is, then click on. Then part of the first condition I gave out after the sentence was that we need to drag out, you see this line here, this line here, you see this, you click on your screen, you see this line here, you take it out to your F here, like this horizontal line, this vertical line, sorry, you bring it out to your F, right? So that's the first condition. Then the second condition is the second condition was our zoom level, right? So we are using zoom level 2, right? So once you have been able to set it up like this, you have something like this. So now for the condition, how do you use this strategy? How do you use this strategy, right? So in using this strategy now, basically we are putting into consideration just two things, and that is our Bollinger Band and our envelope strategy, envelope indicator. So those are the two indicators we are actually putting into consideration. So the first condition is that you need to wait for a spike, right? You need to wait for a spike. So once you have a spike, this our Bollinger Band now is going to open up, right? It's going to open up like this. It's going to open up like this. So once it's open up like this, right? Once it's open up like this, you can start taking your words. Once it open up like this, so if you open up like this now, that means the upper band is going to be at our 20 level and the lower band is going to be at our 80 level. It has to be. So once they open up like this, you can start taking your buy, right? But you must have a spike first. Before you cannot think of that. So once you have a spike like this, right, and this our Bollinger Band actually open up like this, and once it's open up like this, with whichever way you want to open up, it must touch. Since this is a scalping strategy, right? So that means on crash 1000 we're actually going to be buying, right? And on crash 500 we'll buying on crash 1000, crash 500 and crash 300, right? So once you have this spike like this, automatically the Bollinger Band must come down, must be at our 20 level, right? At our 20 level like this, and the lower band must be at our 20 level, the upper band must be at our 80, around our 80 level or above 80 level. So once you have that, right, now, so the second confirmation now is now you now need to go back to your to our awesome oscillator. So now awesome oscillator now, it must have expand back, it must expand down, right? It must expand down, right? So it must expand down, right? So look at after this spike like this, you can see it open up. You can see it open up like this. So you just wait for 3 or 4 candles to actually see where you are going. So by the time you wait for 3 or 4 candles, now it's going to give you this peak already that we have. So once it give you that like this, so you wait for your awesome oscillator, right? So your awesome oscillator must change, the color must change from red to green. It must change from red to green. That is what the confirmation. Listen again. The awesome oscillator is what is going to confirm your buy for you, confirm your setup for you. So it has to change from what? From red to green, right? It has to change from red to green after you've gotten this spike, right? After you've gotten this spike, right, this big spike, it has to change from red to green. So once it changes from red to green, it can be on the first candle or the third candle. Then you can enter and take your what? 3 to 5 candles, and in a maximum what? You take 10 candles. Right? So after this spike like this, we have the red changing to green at what? At our third candle, at our fifth candle, if I'm not mistaken. So if I then you take your 3 to 5 candles and 10 candles maximally, you have this, you are out without being cut. So while you are taking that, it automatically is going to switch from what? From down to up, right? It's going to switch from down to up. So this is one example here. This is another example. You can see you have this big spike here, right? Right? So it changed here from red. You take your 3 to 10 candles maximum. don't be greedy, guys. Just take 3 to 10 candles. Don't be greedy. Another reason why you lose money is that you are being greedy. You are being greedy. Now if you want to take, you just follow the instruction, 3 to 5 candles and 10 candle maximally, and you are out. If you follow the instruction, you will never blow your account again. You will never end up being caught with spike again. Right, you will never blow up your account, and you will never be end up being caught with spike. So if you actually follow the instruction, once it changed from what, from red to green, you enter for what, you enter for a buy and take your 3 to 10 candle maximally. If you use a right lot size, obviously you will be making your 50 to $100 daily target very easy, very easy. And for those of you that have a bigger account, you can make like $500, even up to $7,000 depending on your equity, right? Depending on your equity. So this is another example here. Right, this is another example here. You can see this is another example here. You wait for the spike. After the spike, right, you wait for it to turn. After this spike, now your Bollinger Band will open up. This is our Bollinger Band. Our Bollinger Band will open up like this, spread up like this. So once it spread up like this, after that spike, right, you wait for your awesome oscillator here to change from red to green. That means it's changing from what, from red. Before you were selling, right, then now you need to buy. So you buy at what, at support area. Buy is always green. You buy at green, right? So that is why you need to wait for the awesome oscillator to change from what, to transform from red to green. The awesome oscillator is what is going to confirm, to give you the final confirmation, so that you will not end up being caught up with spike, right? You will not end up being caught up with spike. So for the, this is another example here, right? This is another example, right? This is another example. See, this is another example here, right? This is another example. Let's see, this is another. There are many examples, as many as possible. All you need to do is just for you to wait for the what, for the setup. Wait for the setup, right? Wait for the setup, right? Wait for condition to plays out. Wait for condition to plays out. See, this is another one. This is another example here. You can see you have many of it. I call it the Avenger. This strategy is going to pay you back everything you've lost to your broker. Just make sure you follow the instruction, follow the rules, and don't be too greedy. 3 to 10 candle maximally. 3 to 10 candle maximally. Meanwhile, if you are here to subscribe to my YouTube channel, please do well to hit on that subscribe button and turn on the bell notification, so that you stay updated each time I'm dropping a new content, right? So that you'll be the first one to get notified for it, right? This is another example. Wait for that spike. After the spike, the Bollinger Band will open up, right? Then your awesome oscillator will switch from red to green. Once you switch from red to green, you can enter and take your 10 candles easily. You can get this, you can do this as many times as possible daily, right? You are not even checking the daily trend, you are not checking the 4-hour trend. No, just go to your 1 minute time frame, wait for that spike, and after the spike, make sure your awesome oscillator switch from red to green. Alright guys, if you actually enjoyed this video, please hit on that like button and comment in the comment section. I would appreciate it if you are here. So do well to do your back test very well. I've been using this strategy for a very long of time. I just decided to give it out today. It is an Avenger strategy. You can make a massive money from this strategy. It is easy, so simple, and very profitable. Trading should be simple and profitability. So guys, this is the time to avenge back on your broker. This is the time to take back everything you've lost to the market. So let's keep avenging back to from our brokers. Let's avenge it back from the market, and by being profitable. See you guys in the next video. What's up guys, welcome back to my channel. If you have been losing money on tariff, if your brokers have actually been blowing your account, taking out your money, right? This video is meant for you. I'm right here. I'm back with another powerful strategy that I call the Avenger strategy. I call it the Avenger strategy in the sense that it's actually going to take back everything, your money, every money your broker has taken away from you. If you are the type that you actually enter for a buy, you want to scarf your 3 to 5 candles, and you end up seeing a very big spike like this. You end up being caught by spike. Then this strategy is for you. Right? End up seeing a big spike like this. Obviously, you wanted to just take 3 to 5 candles, and then you end up being caught with this kind of spike. Right? This spike alone will blow your account. So I'm here for you to take your revenge. So I call this strategy the Avenger strategy, that you can use to avenge back on your brokers every money they've taken out from you. So if you actually want to make $50, $100 daily targets, right, then this video is for you. Watch to the end. The video is going to be in 2 formats. Hopefully, we're going to have part 1 and part 2. Right, so in the part 1, I'm actually going to do a very deep analysis, deep dive on the indicator we're actually going to be using. I've always told you guys that no matter the strategy you use, no matter the strategy you use, no matter the tools you use, all that matter is you should understand the pros and cons of whatever strategy you are using or whatever tools you are actually using. Once you understand how your tools work, or once you understand the methodology behind your strategy, obviously you are going to be profitable. You stand out to be extraordinary profitable, and the distinct profitability will be yours. So the video is going to be of 2 formats. We'll have the part 1 and the part 2 of it. So in the part 1, I'm actually going to be talking a very deep breakdown of the indicator we are going to be using. So endeavor you watch the video to the end. So if you actually found the first video, then you should look out for the second video. At the end of the first video, I'm going to be dropping the link to the second video, and while at the beginning of the first video, I'm actually going to be dropping the link to the first video, so that whichever one you stumble across, you will always find the full video of it. Have knowledge keys. There is nothing that keys like have knowledge. So guys, if you are new to this channel, please hit on that subscribe button and turn on the bell notification, so that you stay updated each time I'm dropping a new content, each time I'm dropping a new strategy. Because day in, day out, we keep updating. The reef keep doing maintenance. And day in, day out, as they are doing their maintenance, they are actually updating they are updating their database, they are updating their strategy. So we must also be right smart out there to look at the upgrade they are doing, and how we can also maintain our strategy, so that we'll stay profitable in the business. So guys, the strategy is going to be very simple. Like I said, it is an Avenger strategy. This strategy is going to make everything you have lost to your broker, is going to take it back from you. Is going to pay you back in manifolds. So just stay tuned, and do well to hit on that subscribe button, and also join my Telegram channel. Meanwhile, if you're actually having any difficulties, probably you've not been profitable trading, you can actually contact me, you will see my personal number on the description, so you can contact me let's see how we can actually work it out. Let's see how you can work it out, and let's see how we can work it out. We just need to what profitability. Trading has to just be fun, right? So the strategy is we are going to be using two indicators. The first one is going to be our indicator window 1, right, and the second one is going to be our indicator window 2. But first and foremost, the first condition we'll put in consideration is that we'll look at the zoom level. Right, we'll look at the zoom level. So for the zoom level, right, this is zoom level 0, right, for those of us that use Android, and zoom level 1 for those of us that use iPhone. So this is zoom level 1, this is zoom level 2, right, and this is zoom level 3. So we're actually going to be using zoom level 3 for those that use iPhone, and zoom level 2 for those that use Android, right? So that is what we're actually going to be using. So that is the first condition on this strategy. Then the second condition on this strategy is that you click on this, right, then you bring this horizontal line here, you bring it down to your F here. You bring it down to your F here, right? It has to align with your F here. You can see it has to align with your F here. So that is the second confirmation, second condition. So all this being said, once this is done, right, then we can proceed to the indicators we are going to be using, right? We can proceed to the indicator we are going to be using. So the first indicator we are going to be using, right, the first indicator we are going to be using is that you click on this F here, click on this F here, right, click on this F here. So on this F here now, right, so the first indicator we are going to be using, right, click on this F plus on this main chart here, right, so click on it. Let me even delete everything so that okay. So the first one is going to be our stochastic oscillator. The K period is going to be 5, the T period is going to be 3, slow is going to be 3, price feed is going to be low and high, method is going to be simple, main is going to be 1, and signal line is going to be 1 pixel. So take note, this has to be the color of your background, because we're actually not using the stochastic indicator. We only need, this is what we need in the stochastic indicator. We're actually using the levels alone in the stochastic oscillator. So as for this style now, both main and signal line is going to be the color of your background. If you see very well, my background is white, so that's why I'm making it white, right? So make it white, and then the pixel is going to be 1 pixel, because we don't need it, so we don't want it to show at all. We only need the interface for stochastic oscillator, so that we can add our other indicator on it, right? So once you are done, you click on done, right? So you click on done. So the second indicator we are going to now, click on this F here. Then the second indicator we are going to be using now is our Bollinger Band. So this is where the pros and cons, the simplicity and the and the hidden part of the strategy start coming, plus the major part of the strategy start coming in now. Now the Bollinger Band is a very powerful indicator that we use to measure momentum in the market. Right? So the period is 14, the deviation is 200,000. Deviation is 200,000. Shift is 0. Applies to what? Typical price. Typical price. This is very, very important. Applies to what? Typical price. Higher low close. This HLC now is for our higher low and close, right? So it's going to be is going to be using the available indicators, the available data of every candle, right? Taking out the consideration of the high, the low, and the what, and the close. So by the time they put out the consideration of these 14 previous candles, is going to take out the average range of what the open, the high, low, and close of it, right? So then plot it out for us as that straight line that we'll have on our chart. So once you are done, you click on what? You click on done, right? So you can use any color of your choice. You can use any color of your choice for the style. So once you are done, you click on what? You click on done, right? Once you are done, you click on done, right? So let me delete it so that as we as right, so we are using our Bollinger Band. So the setting is like this. So once you are done, you click on done, so you can see what we have. So this is what you're actually going to be having, right? This is what you're actually going to be having once we add once we had our Bollinger Band. So after that, we'll click on this F here again, then you click on this F here, not this F here, right? You click on this F here, then you click on this F here. So you click on this F here, and then we'll add our the next indicator we are going to be using is our our envelopes, right? So you click on our envelope here. Now this envelope strategy envelope strategy or envelope indicator, I actually have 4 different videos on this envelope that I talk extensively on how you can use this envelope. I call it the envelope strategy. Envelope is a very powerful indicator. It's a very powerful indicator that has it's very powerful and very efficient. People have actually been making massive money with this envelope strategy. If you are here to watch the video, I will advise you you watch the video. I've gotten a very massive feedback on this video. I'm going to be dropping a link to this envelope strategy at the end of this video. So like I'm promising, you are going to be seeing 2 different links. One is going to be to the second video, then the other one is going to be for this envelope strategy, right? So the period is 70. Right, let me show you part of the testimony that we've gotten from people. I've gotten a lot of feedback from it, but let me just show you a few of it. Where's our YouTube? Okay, let me show you a few of it. Right, as in that last week has very profitable. You can actually see what we'll have. Okay, see. Okay, you can actually see. So we did have this made $6 already with the strategy right from the very first day, and we've gotten another person actually come up with his own words. Okay, this is another person. I'll use this strategy to make the market to raise my abandoned account from 3.59 to 6.26, right? That same day now, I see that was how he started building up the accounts, and then right from the account now he did find it again, and the following day he still took the account right from that $6 6.96 and tripled the account again. So envelope strategy has been a very powerful strategy that people who have actually been making fortune from it. So if you are here to watch that video or you don't know about envelope strategy, kindly click on this link at your screen here now and go and watch the envelope strategy. It's a very powerful strategy. It's one of the most profitable strategy you ever find in me. It's been helping a lot of people right from the beginning of this channel. That is one of the most profitable and easy simple strategy that you can use to trade and build up your small accounting, and you can even use it to build up your daily target. It's very simple and efficient and profitable. So you're gonna get the link to this video, to that envelope strategy, at the end of this video. So the period now we are going to be using for our envelope now So we are not using envelope here now. We're only using envelope, a part of the strategy, not the full setup for the strategy. So the envelope now, the period is 70, shift is 0, deviation is 200,000 2. Then the method is simple, apply to close. Then the upper band is 4 pixel, lower band is 4 pixel. You can use any color of your choice. Once you are done, click on what? Click on done. Right, click on done. It's not going to. So we have our envelope. So the period is 70, shift is 0, deviation is 200,000, method is simple, apply to close, upper band 4 pixel, lower band 4 pixel. Once you are done, you click on what? You click on done. So this is what you are going to have in these two horizontal line, right? That two horizontal line. Let me make it very simple so that you get to see it. Our upper band, let's make it green. Right, then lower band, let's make it okay. Let's make upper band upper ground red, so that we'll know that we sell at what at and lower will buy at what. Then you click on done. Right, click on done. Okay, let me make it blue so that it won't be okay. Let me move Bollinger Band blue then. Okay, so I think it's more perfect here now. So then the final but the last but not the least indicator we are going to be using now is going to be our stochastic. So you click on this F, you click on this F here, you click on this F here at this main chart, and not this one here, right? And not this one here. So you click on this F here, then you look for your stochastic oscillator. Right, it's good for your stochastic oscillator. So for the stochastic, no, you look for our awesome oscillator. Sorry, the last indicator is awesome oscillator. You look for your awesome oscillator. Okay, so for the awesome oscillator now, it's default setting. So just click on what? Click on done once you are done. Right, so this is our strategies. So I'm going to be explaining how we are going to be using it in the second video, because I don't want the video to be too long. This is 17 minutes already, so I don't want the video to be too long. So I'm going to do a full details on how we can use this strategy on the part 2 video of this video. So endeavor to watch the part video. You will get the link to this part 2 video at the end of this video. So if you are yet to subscribe to my YouTube channel, please do here to hit on that subscribe button and turn on the bell notification so that you stay updated each time I'm dropping a new comment, each time I'm dropping a new content. So you are going to get the version 2 of this video. So if you actually want to get the version 2 of this video on how you can use it, then hit on that subscribe button and turn on the bell notification. As a matter of fact, we need to avenge back everything our broker has taken away from us, everything we've lost in the market. So if you want to know how to avenge back, how to take back, this is paid back time for our broker. This is paid back time for our broker. So you need to watch this video to the end. See you guys. What's up guys, welcome back to my channel. Alright, so today I'm back again with another strategy that we can actually use to trade crash 300 crash 300, boom 300, and crash 1000 stolingly. Right, so the strategy is a very simple one that we don't need much indicator. We are just using 2 indicators, and the 2 indicators that we are using are a very leading and very powerful indicator, right? So meanwhile, if you are new to my YouTube channel and you are yet to subscribe to it, please hit on that subscribe button and make sure you turn on the bell notification so that you stay updated each time I'm dropping a new content, right? A new video, right? And if you are yet to join my Telegram channel, you can actually join the Telegram channel. You will find a link in the description of this video. And if you actually need any app based on trading or whatever, you can actually still check description. You'll find my contact there. You can send me a mail, or you actually message me on Telegram or WhatsApp. And if you are very fortunate enough that we are in the same region, you can actually place a call, or please be mindful of your word. Don't take my simplicity for granted, right? So that wasting much of your time, guys. The strategy is a very powerful one and very cool. You can use it on crash 300 and crash boom 300 with crash 1000 solidly, right? Right. So the strategy is a very simple one. Without wasting much of your time, I'll be going into how the strategy works. I'm going to be dropping the settings of the strategy in the middle of the video, right? So, but meanwhile, before we go there, let me go on how it works, right? So we are using two indicators. This is the first indicator here, and this is the second indicator, right? This is the second indicator. So basically what we're actually looking at is just this, right? Let me start from here, right? Let me start from the beginning. Right, so we can actually see the recent one that we have here, right? This is crash 300. So what we're actually looking at for, I know you might have come across it, probably you might be trading it or you've heard about it, you watch a video or you actually read a PDF that the market moves in M's and dots and W, right? So we're actually going to be trading the W pattern, right, with this strategy. Now we are trading the W pattern with just two indicators to confirm for us, but the pros and cons of this strategy is that we are just trading the W's, right? So for crash 1000 we all know that we are going to be buying, right? So if you're actually buying, that means we're actually taking a what? We are taking a W, right? That means we are taking, so if you are buying now, that means we are taking the second leg of this W, not the first leg. So what we'll do is that with this indicator now, we actually wait for the indicator to give us our W, right? The indicator to confirm for price to confirm our W. But for price to confirm our W, now there are criteria to it. First and foremost, both the first leg and the second leg of the W must be below this our moving average that we have here on our main chart. So in a scenario like this is what we have. This is actually this is a W. This is our first leg, right? And this is our first leg. This is the retracement, and then we'll have the second leg, then we'll have the continuation of it. So you can actually enter from here and take your 5 to 10 candles or 15 candles or 20 candles as the case may be, right? As the case may be. Now if you are confused and you don't know what the actual W look at, now you can actually switch your indicator, your chart. You can switch it from, you can actually switch it to line chart, so you can switch it to line charts. How do okay, we'll have settings. Okay, so we can see it to line chart. So you actually see that this is a W, right? So to be at the safer side, if you are finding it very difficult to get the W on your candle pattern, then you can switch to your line chart. You actually see it, right, and you appreciate it more. You can see this is the first leg. We'll have the retracement, right? Then we'll now have the inducement again. Then we'll have the second leg that we're actually taking this now. The thing there is that when we talk about M's and W, or let me just limit it to M, right, to W now, because for crash 1000 is going to be W, but for boom 500 now obviously is going to be is going to be M. So when we talk about M and W, there are variation to, at least I know of 3 types of M, right, M and W that we have, right? So when we say we are taking the M's and W, you must know the variation and you must know the condition behind the 3 types of the W or the M that you are taking. You might be very more versatile than me and you actually know more than 3, right? So we all learn every day. Knowledge is not something you can actually keep. So if you actually need the videos on me explaining the M's and W, how they are formed, the psychology behind their formation, and how you can actually take them, right, you can actually comment in the video that you need the videos on M and W, and once I have 50 to 100 comments on it that you need it, I'm going to drop it a detailed video on how you can trade the M's and W pattern in the forex, not just synthetic indices. Now I'm going to enlarge it to, we're going to encompass it to volatility indices, and if time permits us, we can actually take it, we can extend it to currency pair too, right? So for this W that we have here now, this is a W that we call what do we call it? We'll call it we have the variation, the normal W, we have the normal M's and W, we have the advanced W, and we have the normal W, right? We have the normal W, right? We have our normal W, then we have the advanced W, right? And we have that's the two that I remember first. So on this now, you actually see that this is the normal W that we have, right? This is our normal W, and this is our what? This is our advanced W. So you can actually see that the thing there is that this is still the same thing as this, right? It's just for you to know the variation in it. And whatever strategy you are using, I've always told you that you must be able to see your market structure in whatever strategy you are using. Your ability to see your market structure really goes a long way towards to keep it for you. Now, if you look at this now, right, we actually have we had this break in market structure, right? We had this break in market structure. Sorry, the strategy works perfectly on M1 and M5 and above, right? So we have the break in market structure here, right? So after we had this break in market structure, we had a retracement, right? Now the retracement that we have now this is another break in market structure. It came took out this previous low. So once we have that, now we already know that we are in a downtrend. But as we are in a downtrend, we will tend to have the retracement that we have there. Sorry. Okay, so guys, so when we did have the retracement, right? So we had this break in market structure, right? Then we have this second break in market structure, and this is another W, right? In W, right? But this might really be confusing for you. But the moment they take out this I here, right, you can actually enter the peak. We call it the apex or the peak, or whichever you want to call it. Once they take it out, you can actually enter for your buy and take it down. So that is the confirmation you'll be looking out for, right? That's the confirmation you'll be looking out for. So you have your W, right? So from here you can enter for your buy, right? And while you're actually entering for your buy now, you actually link to that's the first confirmation. Then the second confirmation is that the moment you are entering for a buy, right, it must be above the second leg. Now if you want to enter for a buy, price must be above this moving average. So once price goes above this moving average, you can enter for your buy, and you can take your 5 to 20 candles, depending on your account size, depending on your equity, right? Depending on your equity. So you can take it there. And then now that is the first confirmation. So the first confirmation is that price must close above this moving average once you've gotten your W pattern for cash 1000 or cash 300. Once you've gotten your W pattern, so the moment the second leg close above the moving average up, you can take your buy, and that is the first confirmation. So you can take your buy, and once this MACD, now this other indicator here, is actually above this zero level, then that is the last confirmation you must wait for. The second confirmation you wait for after you've seen your W, right, and price has closed above this moving average, right? So guys, just let me go back to my line chart so that we won't waste. So let me go back to my candlestick pattern. So you find it very difficult, so that's what you will need to do. You can see this is our breaking market structure. This is our breaking market structure. So you enter here. As you enter here now, all right, you can see that it is not yet at the what, at the zero level. So you can actually wait like 2 candles. So 2 candles will bring them what, will bring it up here, right? So one thing is that your MACD might be slow, but once, to be at the safer side, wait for this this line on the MACD to be above the what, the zero level. So this is one. So if you do your back test very well, right, if you do your back test very well, you have a lot of opportunity. That is one. That is one. Right. So this is another example here. This is another example here. Right, you can see you have the breaking market structure here. You have the breaking market structure here. Then you have your what? You have your what? Your M, your W, right? You have your W, right? So you enter from here and you take your 5 to 10 candles, right? You take your 5 to 10 candles. Take your 5 to 10 candles. You can actually see. So you have your what? See, right? So from here you can enter from here, right? Even the moving average is actually giving you the W, right? Even the moving average is giving you the what, the W. See, right? It's giving you the W. So there are a lot of it. All you just need to do is just for you to what, to make sure you backtest. This is another example. Right? This is another example. You can actually see you have your breaking market structure, and you can see even your what, your moving average actually confirm the what, the W for you, and your what, your MACD is above the zero level, right? Your MACD is above the zero level, right? Your MACD is above the zero level, right? So there are a lot of opportunity there. So this is another example, right? So if you really want to enjoy this, I just make sure you backtest very well, and you backtest very well. This is your W, right? Even your what, your moving average will actually confirm it for you, right? So there are a lot of it. So for this is for crash 300 now. So for crash, for boom 300 now, right? So from 300 now, what we'll be having is that we're having a what, M in boom 300. We're having our M in boom 300. Right? So for boom 300 now, what you need to do is just for you to watch, you have this breaking market structure to the downside, and you have your M, right? You have your MC. Look at your moving average confirming this M for you. Look at your moving average confirming this M. You can see your M, right? You can see your M, and you can see your MACD is below the what, the negative zero, right? So that is telling you that you are in a down trend. So you can take your 5 to 10 candles, right? So if you enter after the close of this candle here, right, this is 1 2 3 4 5 6 7 8 9, right? And you have a spike. So if you are patient, you still have what, and you are still not taking out, right? You are still in profit even with the spike, right? You are still in profit, and you can take your what, your 5 to 10 candles. You don't need to be too greedy, guys. Don't be too greedy, right? Don't be too greedy, and then maximize your what, your profit, and what, don't think too much on your profit. Don't focus too much on your profit. Focus on what you'll be risking. Just apply good risk management, and make sure you do your top down analysis, right? Make sure you do your top down analysis. So let me share the setting with you. So for the moving average now, just click on this F here. So the moving average is what, the period is 13, shift is 0, method is exponential, apply to what, apply to close. The style is 4 pixels. You can use any style of your choice. So once you are done, you click on done, right? And then for the MACD now, so for the MACD now, we have the fast EMA to be 12, the slow EMA to be what, the slow EMA to be 26, and MACD SMA to be what, to be 2, to be 9, sorry. So let me give you a pro tips about this. Now look at this slow EMA now, right? Look at this slow EMA, that is 26. And we look at our what, if you look at our moving average that we are using on our main screen is 13. That means 13 divided by 2 will give us 2, right? So we actually double the moving average that we have on our main chart, and our what, we'll double it. On our main chart we're having 13, right? On our main chart we're having 13, but on our MACD now we're having 20. That means 2 times of this, right? So on our main chart, it is an exponential moving average, which is what, which is 13, right? So but on our in the MACD now is a slow moving average 26,
So at the longer run, by the time they are done with the calculation, it's still going to be what? It's still going to be an exponential moving average, right? It's still going to be a fast moving average to give you what the signal that you need there, right? To give you the signal that you need there, right? So once you are done, you click on done. Right, so guys, do your back test very well. Let me see if I actually take an entry. You can actually take an entry, crash. This is Montero. Let's look at crash 300. Okay, we've gotten our first leg, right? So probably once we have another spike like this, then I can enter for the second leg now, right? I can enter for the second leg to take my 5 to 10 candles. So guys, if you have any question, you can drop it in the videos. Please do well to like, comment and share to other friends. Let's keep back test very well. Please do your back test very well. Knows what works for you, right? If it is the normal W that work for you, right, or the advanced W that work for you, no deviation, right? The advanced W will always take out the first leg, and that is why we call it advanced. So it's take the psychology behind that is that if it's taking the second, that means it's taking the stop loss of the first people that started buying at this area here. So that's the psychology behind the advanced W. But if it is normal W, it is not going, the first leg is not going to be longer. The second leg is not going to be longer like the first leg. So that means what, there's liquidity at this area. So probably the next time you can just come and take it out, and then you have your buy to the downside. So you just need to understand the pros and cons of whatever one you are taking. Maybe you are taking the normal W or the normal advanced W. So guys, let's do your back test very well. Let's keep making deriv. And let's keep be patient with our broker. Trading should be fun. See you guys in the next video.
What's up guys, welcome back to my channel. So today I'm actually going to be sharing a very powerful strategy you can use to scalp from 1000 and crash 1000. Right, I've gotten a lot of feedbacks from you guys on the envelope strategy that is really doing a magic for you guys. So this is another powerful magic strategy you can use to build your small account. Right, you can use it to build your small account, and you can actually use it to grow your equity. Right, the strategy is a very simple one, and it's a very simple one which you can use to trade from 1000 and crash 1000. Right, meanwhile, if you are here to subscribe if you are new to my YouTube channel and you are here to subscribe to my YouTube channel, please do well to hit on that subscribe button and turn on the bell notification, as that will really motivate me. And you can give a thumbs up and like button. It's really go a long way to help us grow. Right, so for those of you that have actually gone through my envelope strategy, and for those of you that have gone through it, you can actually see that it's actually a banger. Right, so I'm back again with another banger today that you can use to make your broker. So I don't want to waste your time. Right, the strategy works perfectly on crash 1000 and boom 1000. This is a scalping strategy that you can use to take 5 candles to 10 candles and 15 to 20 candles depending on your account size. Understand me very well, depending on your account size and depending on the kind of trader that you have. Right, so obviously I'm going to be doing justice to the both condition that you can take 5 candles and the condition you can take 20 candles as the case may be. Right, so we're actually going to be using 3 indicators for the strategy. Let me walk you through how the strategy works. Alright, we all know that for crash 1000, when we talk about the scalping, that means we're actually going to be buying crash 1000 and we'll be selling crash boom 1000. Right,
The reason why the strategy works perfectly for these two pairs is that these two pairs are less volatile in terms of scalping. Understand my point? They are less volatile in terms of scalping, in the sense that our 5 candles on crash 500 on crash 1000 or boom 1000 will not give you the same thing when you take 5 candles on boom 500. So it makes them more volatile compared to the other boom and crash pair, right? And you actually don't need much. They tend to give you a long trend in the opposite direction, as in the sense that they tend to give you a long trend on scalping, right, than buying, right? So and for since most of you are actually new to trading, and you just need something that will give you a daily target of $10, $20, $100, depending on the kind of trader that you have and depending on the kind of equity that you have, right? So the strategy works perfectly for crash 1000 and 1000. So without wasting your time, let me share you the strategy with you. Right, we're actually using three indicators: a moving average on our main chart and two other indicators on our indicator window. So let me quickly explain the process for the strategy, the condition that we use to take our buy, right? The condition we will use to take our buy. So the first and foremost is that the strategy works out perfectly on 1 minute time frame, since the scalping strategy, and at the same time you can extend it to 5 minute time frame, but all boils down to you. Obviously, if you want to use 5 minute time frame, then definitely you are not taking 5 candles. Don't get that confused, because a 5 candles on 1 minute time frame will give you a single candle on 5 minute time frame. So if you want to use 5 minute time frame, then that is boiled down to you. You need to restructured your plan, your trading plan, suits that 5 minute time frame. If time permit, I will actually do justice on how you can use the 5 minute time frame and 15 minute time frame. But since majority are scalpers, so we'll be using 1 minute time frame, right? We'll be using 1 minute time frame, and basically what we'll actually be going to be looking out for is that would actually be looking for a spike. Then after the spike, and we'll go to our 5 minute time frame, you can actually see. So on 5 minute time frame, obviously you will not be taking 5 candles or 5 candles, like I said, because 5 candles on 5 minute time frame, that's 25 minutes. So that will be 25 candles on 1 minute time frame. So basically what we'll be doing is that, you see this green moving average, right? This green moving average, right, it has to cross this red up. We have to there, right? Let me use another color. Let me use blue. Okay. Okay. So obviously you need to wait for this green moving average here and this red moving average. So the green moving average has to cross the what? The red upward like this, signifying that we are in a what? We are in a buy. Remember that on crash 1000 we'll actually be buying, not selling. So once the green moving average cross, so once the green moving average cross, um, once the green moving average cross, wow, so once the green moving average cross, so once the green moving average cross, okay, so we'll actually be waiting for the green moving average to cross the red upward for crash 1000. So once it cross the moving average, the red moving average upward like this, So guys, sorry for the interruption. Sorry for the interruption. So once the green moving average cross the red upward like this is the first confirmation on our indicator window. The second confirmation is going to be coming on our main chart here. So all we'll be doing is that we'll need to price has to be above this green moving average that we have here. Like this, price have to be above it, right? Price have to be above. So once price is above it, like we have it here, you can take your buy here. And while you are doing that, make sure the green moving average has actually touched the 20 level or the 10 level, as the case may be, for crash 1000, right? So once the two confirmation is met, then you can actually take your buy. Now, to be at the saver side, a good strategy must have an entry and an exit together with your risk management. Now, the risk management here is that once you enter, right, that you have the confirmation all met, the green moving average at the indicator window have actually touched the 20 level or the 10 level, right, and it has crossed over towards the red moving average at the indicator window here, right? And at the same time, that is the first confirmation. The second confirmation now is that on the main chart now, price is above the green moving average. Then obviously you can enter for a buy. So to be at the saver side, you put your stop loss below the moving average, right? Below the moving average, and the last swing. Now this is where the logic comes in place. Your market structure, you can't overweigh it, right? If I'm to analyze this thing now based on market structure, right? Based on market structure, obviously this is what I'm going to be having, right? I Obviously this is what I'm going to be having, right? This is my last swing high, this is my higher high, right? And this is my higher low, right? And I actually recondition met up here, and I want to buy. Obviously I'm buying at this candle here, right? My stop loss is going to be below this swing low, right, which is my higher low, right? And then I'm going to be targeting them, taking out this previous higher high that we have here, right? So my take profit will be the previous swing high that we have in the market, right? So that is what my take profit will be, right? And my stop loss is going to be below the swing low that we have. So once you take your time and backtest very well, you actually find out that the strategy works perfectly. This is another example here, right? This is another example, right? Your stop loss is going, look at now, you have the crossover here, all right? You have the crossover here. This was the last swing high, so your TP can be you can actually take more than that, right? But to be at the saver side, just target the previous swing high, and your stop loss will be below the swing low. So if you observe very well, and if you do your back test very well, you always observe that your stop loss will be below the swing low, and price, and also is going to be below the moving average that we have at this main chart, telling you that no matter how your stop loss won't get hit, and your take profit would be hit, right? So some of you have actually been trading for more than 5 years, and you can actually see you've taken a trade whereby you set your stop loss, you set your take profit, and the trade actually hits your take profit. None of you has never gotten that, right? So do your back test very well. Do your back test very well. This is another example. This is another example here, right? This is another example. So do your back test very well. Make sure you follow the rules. See, this is another example here. Right, this is another example. Right, your stop loss will be below this low, and your take profit will be here, right? You can actually see, no matter how you get, your take profit will get heated, Right. Meanwhile, if you are yet to subscribe to my YouTube channel, please do well to hit on that subscribe button and turn on the bell notification so that you stay updated each time I'm dropping a new content. So this is another example here. Right, this is your previous swing high. Right, so you target your what? You target this high. You take profit to your stop loss will be below this swing low, and your take profit will be here. Alright. Though you can actually trade your take profit and you can trade your stop loss depending on what on your account size and depending on the kind of trade that you have. So this is for 5 minutes. So on 1 minute time frame, the same thing is applicable on 1 minute time frame. Right, on 1 minute time frame, you will tend to get more entries than you will have it on 5 minute time frame. The only thing is just that on 5 minute time frame, the entries you'll be having on 5 minute time frame are more reliable than the one you have on 1 minute time frame. So that is what distinguish between whether you are using M1 or you are using M5. Right. So that is for crash 1000. Then for boom 1000 now, right? For boom 1000, right? So obviously the reverse is the case. So on boom 1000 now, you're actually going to be waiting for a spike to happen. Then after that spike, right, your stop loss will be at above that spike, right? And then you actually wait for what the green moving average to touch the 90 level or the 80 level, and it must cross below, right? It must cross below the red moving average. So once you have that, look at this is a perfect example here, right? Your stop loss will be above this swing high, right? Which is telling you us this is what we have. Practically this is what we have: higher, lower high, lower low, lower high, lower low, right? So your stop loss will be above this lower low, right? The pro tip I'm going to be giving is that whatever strategy you are using, you must be able to read market structure from it. Market structure is fundamental in this business. Once you are able to read market structure in the right perspective, obviously your trading profitability would increase drastically. It's going to increase rapidly. So this is another example here. You can see after this spike up, right, you can enter. So your stop loss will be above this spike, right, which is your lower high, right, which is your lower high, and your target was the lower low here, the previous low. You target this lower low, the previous lower low as your take profit, right? So let me share the settings for you. So the first thing is that for those of you that are new, you click on this F here, right? So you click on this F here, you click on this F here. So the first indicator we are going to be using is our moving average. The period is 21, shift is 0, method is exponential, apply to close. So for the style, you can use any style of your choice. Alright, so once you are done, you click on done. Right, so you have it like this. So the second indicator we are going to be using now you click on this F plus here. Right, so once you click on that, right, the next indicator is going to be our stochastic. So the K period is going to be 21. Now let me tell you one thing about this thing. One thing is that I will never give you an indicator that you don't understand the pros and cons of it. I've always told you whatever indicator you are using, make sure you understand the pros and cons of it. Now if you observe the K period now, the K period is 21 period, right? Period is 21. Now the first indicator we added was our moving average, which the period was 21. That means we'll actually integrate the moving average 21 in our stochastic oscillator to read the trend, right? So that is what we are using that for. Then the D period is 9, the slow period is 9, price feed is going to be low high, method is going to be simple. Now the difference there is that if you remember very well, on the moving average at this method here now, right, on the moving average it's exponential, while on this stochastic oscillator now is simple. The reason being that 21 moving average was going to be 21 moving average, simple moving average will give you a lagging, it's too fast. Sure, you understand? It's going to be too fast, so you tend to have a fade, signal. It's going to give you a fake signal, right? But with the exponential, now exponential is a little bit slower, so it's going to filter the noise in this first signal is going to be giving. So that is what we actually do with this indicator. We integrate both the moving, the fast signal and the what and the slow signal, then we'll filter it out with our with our D period. So that is the pros and cons of this strategy, right? That is the pros and cons of this strategy. So once you are done, then the level is, we have 4 levels: the 20 level, the 80 levels, the 10 level, and the 90 level. Now the 20 level and the 10 level is going to be for a buy on crash. Then the 80 and the 90 level is going to be for what? For a sell on boom. So once you are done, you click on what? You click on done, right? So after that, you add the last moving average, which is our what? Our alligator. Right? For the alligator now, the job period is 9. Just follow the setting that we have here. Then the method is exponential. Apply to median price, high and low, divided by 2. So once you are done, you click on what? You click on done. So and then you have your what? You have your chart like this, right? You have your what? Your chart like this. So guys, do well to backtest very well. Do well to backtest very well. If you actually enjoyed this video, please do well to click on that like button and subscribe if you are new to the channel. And if you are an old subscribers, do well to share with friends, let them also benefit from that. So whatever question, whatever comment that you have, you can actually drop it on the video. I will definitely respond. And if you actually need more info on personal mentorship, or you actually need an insight on signal, then you can actually DM me. You have my contact on the description of this video. And for those of you that are new, you can actually join my Telegram channel. You will actually have a daily, a constant update on what? On the financial market. As we get the updates, we're definitely going to update you. So guys, see you well. Let's do it to keep making the reef. Let's do it to keep making the reef.